Welcome to the Mostly Money, Mostly Canadian podcast with your host, Preet Banerjee.
Hey everyone, welcome back to this week's edition of Mostly Money, Mostly Canadian. I'm your host, Preet Banerjee, and joining me today on the podcast is Richard Cooper from TotalDebtFreedom.ca. Welcome to the podcast, Richard.
Thanks for having me, Preet.
Okay, Richard, so as most listeners know, I'm pretty ritualistic in my podcast when I do my interviews, and the first thing I like to do is talk to people about their background, who they are, what they've been doing that has led them to where they are today. So perhaps you'd like to give us your background and then how you ultimately ended up being at Total Debt Freedom.
All right, well, I wish I could talk about some cool travel experiences or my racing history, but I'm going to tell you about something that has to do with credit card debt.
Okay.
And my background is really in the collection industry, in credit and collection. So I spent, about 11 or 12 years working with third-party collection agencies. Started out as a bill collector, worked up through the ranks, and left as a collection manager, working for pretty much every creditor during that time. So from banks to governments to credit card issuers to sundry items for ATM deposits to leases and finances for vehicles, pretty much anything that you could finance that would go to collections, I had worked at some point. So I took a package after about 11, 12 years of doing this, went home and kind of thought about what I wanted to do. My first thought was my first love is speed, so I was going to open up an indoor go-kart track.
Nice.
But that really didn't work out for me. And I was doing my taxes, and the accountant I was working with was kind of dabbling in the mortgage industry, and he said, look, I'm trying to arrange financing for this guy, and he threw a credit bureau at me, and he said, what can you do? You worked in the credit and collections, and you had a whole bunch of R9s and a really low credit score, and this guy was looking to try to find some private money through a mortgage agent. So I said, settle the debt, and I threw it back at him because he basically said, look, I need about $50,000 to pay off all these credit cards, and all I can approve on private lending is about $30,000. What do I do? I said, just settle it. And he threw the credit bureau back, and he said, good, go do it and charge him. So that's basically how my debt settlement business started, because I knew that creditors would yield in the hands of a skilled negotiator. So if you're delinquent on unsecured debt, whether it's credit card, store, anything that's unsecured. I mean, if you had a car lease or even a vehicle loan and the vehicle's been repossessed, you can settle that. So if there's no collateral, it's something that you can negotiate. You're in a position to bargain. So I started the business mostly with the mortgage community, helping them approve financing and getting people's credit card debt paid off through some mortgage financing on their home. And then I moved into dealing more with people that weren't homeowners, because I found there was a lot of people that had a ton of credit card debt and they just didn't have either one, a home, or two, sufficient equity in their home to do a mortgage refi and pay off their debts with that. And I basically built Total Debt Freedom on that premise. It's been going since about 2003, 2004 now. So we're going on 10 years.
Okay, so tell me a little bit about the differences between some of these terms. So there's debt settlement, which is what you do. How is that different from credit counseling, bankruptcy, and consumer proposals? Okay,
so they all get you debt-free at some point if the program's successful. Things that you've got to consider is total cost of the program. So how much of the cost should you get out of debt? The length of the program, because really the sooner you can get out of debt, the sooner your credit report can start to be repaired and you can get back on track. And the other thing you want to consider is who is the company working for, or who is the individual working for that's getting you out of debt. So you've got debt settlement, you've got credit counseling, which is usually in a nonprofit format, and you've got the offerings from a bankruptcy trustee, which is either bankruptcy or a consumer proposal. The differences on those metrics would be debt settlement works for you because it's paid for by the individual, whether they do it themselves or they hire a company to do it. You can only advocate for the individual that's paying you. Credit counseling, on the other hand, the majority of their financing, about 2/3, comes from credit card companies. So the very people that you owe are actually paying the nonprofit credit counselors to get you out of debt. So you can consider who they're really looking out for. And then the other offering through the bankruptcy trustees will be consumer proposal or bankruptcy, which is pretty much the same thing. One takes about 5 years to get out of debt, which is a consumer proposal. And the other way to get out of debt is a bankruptcy, which I think discharges after about a year, maybe 14 months or so now. And the bankruptcy trustee is kind of like a referee. I mean, they position themselves as a referee, but in certain respects, like for example with a consumer proposal, they get paid a percentage of the proposal payment back to the creditor. So the higher the payment back to the creditor, the more money they'll make. So, one could argue that maybe they might have some incentive to make sure they squeeze out as much as possible. Length of time to get out of debt is probably quickest with debt settlement. It would be quickest with bankruptcy, actually, because it's probably the simplest, easiest procedure to get out of debt. It just has longer term effects on your credit rating and can be costly sometimes. Consumer proposal and a credit counseling plan can last usually about 5 years on average.
Okay. So tell me a little bit more what you alluded to with the credit counselors. So they get paid by the creditors.
So a nonprofit credit counseling company operates very similar to a collection agency in the sense that they're a kinder, more friendlier collection agency for the credit card companies. They work on a contingency basis. So a collection agency might, for example, have a 15% commission rate. They go and take $1,000 payment from you to pay off a debt. They hold back $150 as their fee, and they send the difference to the credit card company. A nonprofit credit counselor has a system called a fair share. And the donation for the fair share can usually be around 15 to 23% or so. And they hold back that before they send each monthly disbursement to the credit card companies. The biggest difference is most collection agencies want payment in full now. The nonprofit credit counselors will set up a plan to repay the full amount of the debt with a slightly reduced interest rate over about a 5-year period of time.
Gotcha. Okay, and how does it work for debt settlement, which is what you do? How do you get paid, and how does that the person who comes to you for your service, how does that work? Do they pay you out of pocket?
Yeah. So broadly speaking, people that get involved into debt settlement or debt negotiation, it's also called debt arbitration. It's all the same thing. It's basically the process of striking a deal with the people that you owe money to. The total cost to get out of debt is always considerably less than what you owe on the day you start the program. Even if you hire a company like mine, like TotalDebtFreedom.ca, to do it for you, the cost will always be way less than what you owe on the day you start the program. The biggest difference is you can either do it yourself if you have sufficient time and resources, which is why I wrote this book. I'll get into that in a second. Or you can hire a company who acts as a professional to do it on your behalf. Either way, you've got somebody in your corner that's only being compensated by you to get you the best deal possible.
Okay, so you alluded to this book. So tell me about this book that you wrote.
So my book's titled Enough is Enough, the DIY Debt Settlement Guide Your Creditors Don't Want You to Know About. It's a bit of a mouthful. It's kind of been on the bucket list for a while because I've wanted to put a published item out on Amazon as a Kindle that explains how to settle your own debt. I've seen a ton of these things published in the past, mostly by American so-called experts. But what I learned is many of them, when you drill down on who they are, they're not really doers. They're more teachers. And the problem that I have with that is most people that can do and those that can't will often teach. So I found a lot of the information they gave, it was just a big snooze fest. You could listen to 5 or 6 hours of audio and not get a lot out of it. So I wanted to condense it, make it into a book that was less than 100 pages long, offered all the tools and resources that you needed to get going, and just send you off on your way and settle your debt for, you can buy the book for less than $10 on Amazon right now as a Kindle.
Okay, so someone could buy the book for $10 and try and tackle debt settlement on their own, or they could hire a company like TotalDebtFreedom.ca. So give me an example. So we talked about the commission rates of a credit counselor. Let's say someone came to you and let's say they have $50,000 in credit card debt, or use whatever example you want. What's it going to cost them to use your service if they engage you to work for them professionally?
It's difficult to say without taking a look at their list of creditors,
right.
What assets they might have, how much equity is in their home, their job situation. But broadly speaking, they're going to get out of debt for way less than what they owe on the day they start. So if they owe $50,000 today, you could probably estimate a savings of probably $15,000 to $20,000. it could even be deeper depending on how severe their financial hardship is, how old they are. I talk about this sort of stuff in the book, like some points of leverage that you'll have when it comes to negotiating your own debt. Like somebody that's 25 years old, for example, that might owe $50,000 in credit card debt. The credit card companies and the grantors know they've got this person on the hook for a longer period of time. Statistically speaking, somebody that's 25 will live longer than somebody that's 65.
Right.
So you might have a better bargaining position if you're older and owe debt, especially if you're retired, if you're disabled, you don't have a good source of income, your prospects of earning income in the future, have diminished.
Mm-hmm.
It really varies on your situation, but I point to all these points of leverage when it comes to negotiating debt for people. Everything that we've done here, I've basically distilled and I've put it in the book. So all the tricks of the trade that we've learned over the years, you'll find it in that book, and it explains how it all works. Like one of the things that I talk about there is a golden rule, and you've probably heard this in the finance field, he who has a gold makes a rule, right?
Mm-hmm.
So, I was in the mortgage business a long time ago, and that was one of the first things that they taught us is, if you go to apply for a mortgage and the bank or the mortgage lender looks at your application, they can shoot it down because it's their money and they can decide whether or not they like you as a borrower. Well, you can flip that rule upside on its head and use it to your advantage when you owe a credit grantor money, and you're in a position now where you owe them money and they want it. It's just you have to be able to position yourself as somebody that has experienced financial hardship, has been unable to pay back the amount that they owe. You have to describe to them what had changed in your life. Usually for somebody, it's a life event. Nobody gets up in the morning and just says, right, I'm just not going to pay my bills today and forget it.
Right.
It's, you're injured on the job and you can't work. Your disability insurance doesn't kick in. There's something that surprises you, and you probably don't have a savings fund or a rainy day fund to cover yourself. So, those moments of financial hardship are used to leverage the best possible settlement that you can. And you can either settle in a lump sum right now if you have access to the money. You can set up a budget that you can follow where it might take you 2 or 3 years to raise a lump sum to settle. But generally speaking, you're in a better bargaining position to give them a big chunk of cash rather than let it trickle down. So if I owed somebody $5,000 and I offered them, $2,000, they might be more willing to take that than to take $2,500 or $2,800 over 8 or 12 months, because
Right.
you're more likely to get all the money if you just do it in one shot.
Gotcha. Okay. Now there are some free tips that we talked about in the pre-interview that you wanted to share with people. We talked about what the golden rule is. The other two is why you might want to settle your own debt. And maybe my question around this is, I think there are some people who probably wait longer than they should before considering what their options are with respect to either bankruptcy, consumer proposals, credit counseling, or debt settlement. And they just keep on waiting, and it becomes sort of this vicious cycle. They keep waiting, it gets worse, keep waiting, it gets worse until they get to what they feel is a point of no return. But if you were to counsel someone and say, well, here's what you should consider, or some of the criteria when you should start to consider talking to someone, what would that be? What would your advice to people be?
Well, just deal with it as soon as you can. As soon as you have the resources and the ability to deal with the debt, deal with it. You're going to have a life event that might come along. We talk to people all the time. It could be, if my child was sick or was in a hospital, that would take priority over pretty much anything else in my life. So I understand that there's certain things that get in the way of paying bills. But as soon as you have the time and the resources, go and do it. Something like a vacation or a weekend at the cottage or a party should not take precedent over getting out of debt.
Right. Yeah. But I guess
you'd be surprised. There's a lot of people that make that a priority, right?
Yeah. No. I absolutely have seen it, and I continue to see it all the time. But my question is more, how do I phrase this? If you've got, say, $25,000 in credit card debt, and you're never really putting a dent into it, but you don't really feel like, everything could fall apart tomorrow if there's a minor emergency, but you never really feel like you're putting away a dent. And I think there's a lot of people who are in that situation. Would they be someone who should consider debt settlement, or should they just continue to hope and pray that, they'll get a massive raise tomorrow and all of a sudden I'll decide to use the surplus to make smart choices with my money? Or should they just sort of say, okay, you know what, it's not getting any better and I need to seek some professional help?
Gotcha. Yeah. So I'm just going to be blunt because that's how I roll.
Yeah.
Doing nothing is dumb. Hoping and praying is definitely the wrong thing to do. That's unfortunately the approach that most people take, is they just stick their head in the sand and figure it's just going to go away. Like, I'll figure out a way to deal with it. As long as my phone's not ringing and the notices I get in the mail aren't threatening about taking legal action or garnishing my paycheck, everything's okay. Well, for the most part, if you're carrying a credit card balance monthly, and you're not seeing the balance go down, or you're barely seeing it move, everything's not okay.
Right.
You've got to do something about that. Debt is really expensive. Unsecured debt is super expensive. I mean, the interest rates are anywhere from 19% to like 26%. Sometimes they bump it up if you miss a couple payments. Mm-hmm. There's other credit grantors that charge around 30% or so. So if you're carrying a balance and you're not paying it off. I mean, if you're just making the minimum monthly payments, there was a new disclosure they put on credit card statements a couple of years ago, enforced by the government, where it would tell you how long it would take you to get out of debt.
Right.
My biggest complaint with that is it's not like a cigarette package where half the real estate of the package is dedicated to telling you how harmful this product is to you.
Right.
It doesn't actually say in your credit card statement, if you just make your minimum payments, it's going to take 35 years in bold print, and it's going to cost you this amount of money. It just says in very small print, it's going to take you this long to get out of debt. So to answer that question, if you can pay more than the minimum, then you're going to see yourself getting out of debt. If you're at the point where you're just making the minimum monthly payments, or you're skipping months, or you're taking a cash advance on one card to pay the other, you're going to hit a wall at some point when you hit your credit limit. Your credit score is going down the toilet. You're not getting out of debt. You're just delaying the inevitable. You got to do something about it.
Yeah, absolutely. And I think there's a lot of people who handle credit really well, and I think there's another group of people who are just awful. And it's really like, these two distinct groups. But there are the people in between who are, they're not, 50 grand in credit card debt or whatever, but they're kind of stuck in this place where they're carrying a balance and not doing anything about it. And, I feel that, they could get out of it if they took their money more seriously and put together a budget and use some discipline and some hard work to get themselves out of that. Because if they don't, because then they will eventually get to that point where, maybe they do have some kind of emergency where a few months later they are getting those phone calls every day and what have you.
Exactly. And that's the thing, like you hear this term deadbeat thrown around a lot, like, who's a deadbeat? Well, I can tell you who the real deadbeat is. It's probably me, because the banks don't make any money off me when I use my credit card. I get to fly around the world on points. I pay off the balance in full every single month.
Yeah.
All they're making is their merchant fees. I never pay interest on it.
Right.
The people that are carrying balances, paying interest, paying late charges, paying cash advance fees, they're exactly where the credit card companies want them. They're in a position where they're a profitable client. Yeah,
one of my biggest irks is people who put everything on their credit card and say, I do it because of the points, and they carry a balance on their credit cards. I'm like, well, okay, you're earning 2% one time for the purchase, but you're being charged 20% in perpetuity. I mean, it's just really bad at math. Okay, great, Richard. So tell us again where people can find you and where they can find the book.
Okay, so if you want to reach out to me, it's just CEO at TotalDebtFreedom.ca, or you can go to the website. It's just TotalDebtFreedom.ca. If you want to pick up the Do-It-Yourself Debt Settlement book, it's got tons of content in there. I think it's about 74 pages. It goes on a Kindle reader, or you can get a Kindle app for your iPad, your laptop, your computer, whatever. It's a free app, and you can download it there. It's less than $10. It's just on Amazon. So just go to Amazon and search either Richard Cooper or Debt Settlement, and you'll see my guide there.
Perfect. Richard, thank you so much for being on the podcast.
Hey, thanks for having me, Preet.